Hi, I'm Chris Brycki, founder and CEO of Stockspot, which is an online robo-advice business in Australia. So there are two big themes playing out I see at the moment in the ETF space in Australia. First of all, there's a real thirst for income products. So the cash rate in Australia is just over 4%, yet most banks aren't passing on these higher interest rates through deposit accounts. So ETFs are just a great instrument for investors and consumers in Australia to search for higher yields. So we're seeing interest in cash products. There are some great cash options on the ASX. We're also seeing interest in fixed interest and then also dividend type ETFs. And this interest we use to basically build our own income-focused growth portfolio, which has been around for about 8 months now. It's really focused on dividend shares, both globally and locally in Australia, some corporate bonds and other high-yielding assets like property that helps to juice up the yield of these portfolios, and that's something that Australian investors find very attractive. It's returned about 9.6% over the last 8 months, so it doesn't quite have a 12-month record yet, but positively, that's about 3 times what people would have earned in their bank account over that period. So it shows that ETFs are a great option for people looking for income. And with retirees in Australia, we're seeing some interest in this new portfolio. The other big trend we're seeing is in inflation in Australia. So this has come back onto the vernacular over the last few months because the inflation rate in Australia has started to tick up again. It's back over 4%, which is higher than most of the developed markets at the moment, and our central bank looks like they're going to need to increase interest rates potentially again by the end of the year. That's led to Australians really focusing on how they can protect their wealth against the ramifications of inflation. So we've built a portfolio with a higher skew towards mining shares, gold and silver as hard assets, and assets like infrastructure that typically have some inflation protection built in. This portfolio we've also only had up and running for about 8 months now, but has returned 13.8%. So it's had a good start to its life, and we think there'll be more and more interest in inflation protected assets going forward. So robo-advice is really an online system to help everyday consumers invest their money in a safe and sensible way into long-term investments. Before robo-advice, it was very difficult for people in Australia to work out what's the right sorts of investments to be making, the right asset allocation, the right underlying instruments. And so what we've built at Stockspot is a way of automating that process and making it accessible to everyday consumers. So now anyone, regardless of how much money they have, can get professional level advice around how they should be investing their money. And so the way it works is people come to our website at stockspot.com.au, they answer a bunch of questions that helps us assess their investment horizon, their cash flow needs, their liquidity requirements, and their investing experience. And based on this data, we recommend both the investment strategy, the asset allocation, the underlying instruments, and then help the clients over time rebalance their portfolio to keep it optimized. So really what someone that would used to need a lot of money to see a financial advisor to access is now accessible to everyone. And we use ETFs in these portfolios just because they're such a fabulous product. We act as a fiduciary for these clients, and we truly believe that ETFs are the best long-term instrument for growing wealth. They're transparent, they're tax efficient, they allow you to guarantee you own the winners in the market. What's not to love with ETFs? Our clients have certainly enjoyed their ETF portfolios for the last 10 years, and part of our role at Stockspot is trying to pick and choose the best ETFs for each of our clients' goals. So I see a lot of potential to apply AI, artificial intelligence, to different aspects of robo-advice going forward. First of all, robo-advice has only been used in Australia up until now for discretionary investments. We're very excited to soon be applying it to superannuation, which is the pension system in Australia. It's very large. We've got about 3.7 trillion Australian dollars in pensions. Yet right now, most Australians don't really get any guidance around how that money should be invested and what's the right asset allocation and underlying instruments for their personal goals. So we want to apply our robo-advice model to pensions to really guide consumers into the right investment strategies. So that's really the first step for us at Stockspot. Going forward, I think AI then has a lot of opportunities to further enhance our value proposition. First of all, on the investment side, I think it can help with rebalancing and tax optimization to really personalize the experience further. But also, I think it can help to identify behavioral errors and issues with judgment that consumers are making and help to guide them onto the right path for long-term savings. And I think broadly, Mirai Asset is doing a lot of their own research into the use of AI for index construction, which I think is pretty fascinating, trying to work out how indices can be using AI to be more efficient and also create great long-term portfolios. So we're looking forward to collaborating and learning more from Mirai Asset on how AI can be incorporated into investment management.